Well, Dipula Income Fund reporting a 7% increase in full-year combined A and B-linked distributions. That's to 150 cents. The fund's distributable earnings are up 46% to 215.2 million rand. The portfolio of the company increasing to 3.75 billion rand. Joining me to dissect the results, CEO Isaac Peterson. Thanks for joining us, Isaac.
Thank you.
Let's look at the company portfolio because it's increased during the period. One part of that has been acquisitions. The other part has been capital appreciation, essentially, of those property assets. So break that number down for us in terms of some of the strategic acquisitions you've made over the year.
No, great. We announced earlier in the year that we had acquired properties to the value of about 2.2 billion since listing. It's obviously a bit of a process to get those properties into our numbers over a period of time. So what happened since the interim period, or in fact since the beginning of last year, this financial year, is we have transferred or taken transfer of about 1.1 billion worth of properties out of that pipeline of 2.2 billion. And that's mainly been 3 large office properties in Pretoria occupied by government, and a host of retail properties that we've taken transfer. That's obviously been great for our portfolio because we've sort of grown from about a 2.4 billion portfolio last year to 3.7 billion now. And you can see that coming through in the numbers in terms of the quality of tenant that has done to our portfolio. I mean, we are sitting now at something like 85% of our tenants are what we term A and B grade tenants. So that really brings good quality into our portfolio
and you're talking
sustainability.
Office and retail here.
Office and retail.
Yeah.
At the moment, our portfolio is still skewed towards retail. We're sitting at about roughly 54% of our portfolio at the moment is retail in GLA terms, and industrial and office sort of share the remaining, but almost half in rentable space terms. Obviously, given the sort of different rentals that you attract in those two sectors, you'll find that the industrial tends to be the smaller in income terms at about 13%.
Yeah. Looking at the retail sector now, I mean, the South African retail property as a space and property has been an outperformer. We've started to see numbers coming through where retail sales have been falling back. Does that not concern you with a company that is heavily weighted towards this sector? Absolutely.
Well, I mean, I suppose we're running a portfolio, so the lovely thing about having a diversified portfolio is the fact that you'd have the sector sort of hopefully carrying each other through the tough times if you have the sector movements moving negative towards a particular sector. But when it comes to the Dipula portfolio, again, I think because of the nature of retail asset we invest in and the location of those assets, they tend to be occupied mainly by national tenants, as seen in the 85% national tenant or A and B tenant mix. And that makes it a bit more resilient than any other sort of retail property that's, for example, occupied by restaurants in your urban sort of centers. So our view is that our portfolio, relative to the market, should be a lot more resilient. But of course, we would be concerned by the trends that we're starting to see in the retail market and that sort of thing, and it's something that we're keeping a close eye on.
At the same time, you've opened a new property. The Tower Mall grand opening was recently, that in Klerksdorp. So that, of course, shows where you're positioned. I mean, you're not positioned the Liberties in Sandton City. Why specific areas like that do you see opportunity for growth in?
A huge amount of underinvestment, and the particular asset that you're mentioning is one of our best so far in terms of that sort of market segment. And the reason we love that asset so much, and the reason why we continue to invest there, is that if you look at a township like Joburton, for example, it's been in existence since the 1940s. There hasn't been a single investment into real estate. Yet, if you look at the population in Klerksdorp, 60 to 70% of the people reside within that area, and there's no retail facilities for them. So we believe that by bringing retail so close to the people and cutting out the transport factor out of it, we're investing in good assets, and therefore our assets will be more resilient than, for example, the regional centers that are sitting far from from the people.
Just looking at the funding of the business, I mean, you had a capital raising 650 million rand. You also accessed a debt facility of 430 million rand. You're now looking to have a credit rating so that you can access capital markets, debt capital markets even more. So tell us about the fact that you're wanting to raise more debt. How much are you looking to raise, and why do you think it's a good time to start looking at that side of the funding equation?
Yeah, excellent question. I think as our portfolio grows, as our fund grows, naturally we should be looking to diversify our sources of funding. On the equity side, obviously well spoken for, because there's a host of institutional investors that are investing in our fund there. But when it comes to the debt side of things, we invested. We've got banks mainly in our portfolio of funders.
Yeah.
So our thinking is that we're now approaching the right size. Getting to about 4 billion, 5 billion. You've got a nice chunky size to go out to the capital markets to go raise finance with. So from a funding diversification point of view, there is no better strategy for us at this moment.
And with interest rates still at these lows, let's see how much
Absolutely.
longer for, but of course, that of course would be one of the driving factors. Thanks for joining us today, Dipula Income Fund CEO Isaac Peterson.